Hey, what's going on, 200K fam? It's a 200K adjuster coming at you here from North Carolina. I just got the news over the weekend that I will be heading home on the 28th, which makes me very excited. I was gone from home a little bit longer than I was anticipating, but I am so happy that this thing is coming to an end. I'm probably going to take the month of February off at least and get ready for hail season. The plan is actually my dad is getting his license, and we are going to try to do some teaming up on during hail season, and so look forward to that. Man, I cannot speak this morning. Sorry. But anyways, I just wanted to talk about a topic that I've seen a lot of people bring up on Facebook. Is also a couple people have asked me to do a talk on it personally, and that is a topic of LLCs and insurance. What you need as an adjuster for insurance, and also should you run your adjusting business through an LLC. So before we jump into that, I kind of want to give you a history so you can kind of understand why or how insurance and LLCs came about. Believe it or not, insurance specifically has been around for thousands of years. A lot of people don't know that. And actually, the first form of insurance that we know about was started by the Babylonians under Hammurabi the Great. It was for merchants who were carrying people's property either across the sea or shipping or trade goods or whatever. And based on what you read in the code, Hammurabi created the first written legal system that we know of. This is, I think, like 3,500 years ago. I mean, it's a long time. And basically, under his law, he stated that a merchant could not be held responsible for more than 50% of any lost goods during a travel. So if the ship was attacked by pirates, the ship ran into a storm, and the goods were lost, the merchant could not be held responsible for more than 50% of the lost goods. And that was just a way to, one, make sure that, the merchants actually had a skill set and they weren't going to, just not anybody was going to handle your goods, but also that, accidents did happen, and it wasn't right for the merchant to bear 100% of the responsibility when, accidents happen. So that was the first case of insurance. Then, as the years went on, again in Babylon, and actually started going into India and even China, the insurance was changed a little bit to basically say, because now it wasn't just one ship carrying goods, it might have been multiple ships carrying goods. And so the insurance they did during that time was they would divide the goods up between all the ships. So all of your goods wouldn't be on one ship, and all of the goods on all your neighbors' goods wouldn't be on one ship. It would be divided through all the ships. And we actually see that in the Bible in Ecclesiastes, where Solomon talks about give a portion of 6, give a portion of 7, or even unto 8. What he's talking about there is dividing up the goods just like they used to do, to make sure that if something happened, you wouldn't lose everything, right? So if you had your goods and you were sailing across the sea, and one of the ships capsized and all the goods in that boat went under, your goods was divided up between multiple ships, and so you wouldn't lose everything. Okay? And then again, the merchant on that ship, the sailor on that ship, wasn't responsible for more than 50% of it. So you start to see how insurance started to evolve a little bit. Well, then we get into the Roman times, and business owners were like, hey, why are merchants the only one who get this kind of protections? Why can't we get protections when we have partnerships and stuff like that? And so you had the establishment of what's known as the first corporation, or corpus. And basically what a corporation said was, if you were part of a group of people, you all signed a a document of ownership that all risk and all taxes would be divided up among the group instead of each individual person being responsible, right? So, if I had 5 people that I was in business partnership with, and we had $1,000 worth of damage, that damage would be divided up among the 5 people equally. And that was considered a business entity. It was considered a corpus or a corporation. It was the first time that the idea of a corporation came into being, and it was all based on insurance. So when you think of insurance and you think of corporations, it's almost interchangeable in a lot of ways, because both entities were designed to mitigate risk, to reduce the amount of risk that people were taking. Okay, so that was during the Roman era. So you had insurance, was kind of coming about. Then you had kind of corporations. After the Roman Empire fell, corporations kind of died off a little bit and then started back up again a couple hundred years after the Roman Empire fell. Matter of fact, the oldest corporation in the world today was started in Sweden, or is still existing in Sweden, and it started in 1347. 1347. So it has been around, going on, what is that, 900 years? I'm sorry, 1347. So that's 700 years, right? So going on 700 years. Math, gotta love it, right? But so in 1347, I can't remember the company that started, but is still in existence today. And it was one of the very first corporations to get started after the idea of corporations came back during the Middle Ages. Okay. Now, in the 17th century, when countries were colonizing other parts of the world, corporations started to change a little bit, and now it became something more of, corporations started working for the government per se. So you had like the East India Trading Company, who was working for the British Empire. And not only were they given certain protections, but they were given monopolies. Now, we don't do monopolies anymore, but the East India Trading Company had an area of the ocean that only they could make money off of. Only they could operate in that area. You had the Dutch East Indian Trading Company. You had, I can't remember, there's 2 or 3 more that had these special contracts with the British government that said, hey, only they would be recognized as a corporation in this area, in this field, like either in the Caribbean or in, off the Canadian coast, or, other areas around the world. So you're starting to see a little bit more of a preference, governmental preference giving to corporations. Of course, when the United States got started, there was the idea that, hey, monopolies, it didn't start off that way, but eventually, in the early 1900s, people like Teddy Roosevelt came around and said, hey, you know what, these monopolies, these corporations that have these monopolies, that's not right. We need to have people to be able to compete. And see, there was the antitrust movement. A trust was a monopoly or a corporation that had a monopoly over a certain area. And Teddy Roosevelt, hey, that's not right. We're not going to do that. We're going to have open competition. So there's no more monopolies. Well, fast forward until the last couple recent years, what you ended up having is you ended up having multiple. You had one person who might be involved in multiple corporations, right? So let's say that one corporation went down. He was involved in 3 other corporations, let's just assume, right? So one incorporation declared bankruptcy, and the financial institutions would go after that person's other corporate interest to try to get some of their money back. And the argument was made, hey, if I'm, why am I supposed to give up money that's from these other corporations when it was just this one company that failed? I shouldn't have my other companies liable for the failure of one company. And so what you ended up seeing is corporations themselves became individuals in the eyes of the government. So that's why in 2008, when the financial crisis happened, all of the bankers, the banks went bankrupt, but none of the people who were responsible for it really lost a whole lot of money, right? I mean, they lost some stock shares and stuff like that, but lifestyle didn't change much. And a lot of people were angry at that, and still hasn't much changed since then. But the idea was, government started seeing corporations as people instead of putting all the liability on the individual owners of that corporation. So that's why a corporation can fail, go bankrupt, and it not affect the personal finances of the other, the corporate members. Okay? Much. We say, what does it have to do with the LLCs? Well, what eventually happened is, hey, why are only big companies able to have these protections? Why can't we have protections for smaller businesses, individuals that take on the same amount of risk? So you had a sole proprietorship, and it's still true today. If you had a sole proprietorship and your business had to declare bankruptcy, the banks or the lenders could go after your personal goods and items. So your company goes bankrupt and you have a car, well, they come after your car, or they come after your house, right? And so now you're homeless, or now, how are you supposed to make money if they come in and get the two most important things you need in order to make money, a home and a vehicle, right? And so the idea was, hey, why are only corporations given these protections? And that's when you have the formulation of the LLC and the sole proprietorship. And it works very similar, but on a much smaller scale, in the fact that, not sole proprietorship, S corporations, right? So like a small, an S corp, an S corp. There we go. The idea being that small companies deserve similar protections that major corporations have. So in an LLC operates tax-wise very similar to the way that a sole proprietorship works, but in the LLC, business property is separated out from personal property. That's why a lot of adjusters wanted to have LLCs. Now, S-corps are more for like partnerships, small partnerships, not really for, now you can be a sole S-corp owner. Typically, that's not the smartest way to go about it, because you're going to be paying taxes twice if you're not careful. So you don't want to do that. But in an LLC, what happens is, let's say you're an adjuster and you fall through the attic of a home, and the homeowner sues you for negligence. And let's say it was a really expensive home and there's a lot of damage that caused. Well, the homeowner can go after LLC property, but it can't go after personal property. So they can't come after your savings account. They only can go after the LLC saving account. Does that make sense? So there's a lot of, what you do is you mitigate risk by going with an LLC. Now, if you are just out there working under your name and you're a sole proprietorship, you haven't actually filed to become an LLC, guess what? You fall through that roof, you fall through that attic, and they're going to sue you for negligence. They can go after just about anything that's yours in order to pay for those damages. So that is the purpose of an LLC. Now, should you set up an LLC? First of all, you're thinking, okay, well, that's the case. I definitely need to go set up an LLC. By the way, you can set up an LLC anywhere from $500 to $1,000. So it's a really good investment. But a couple things you need to think about if you're a brand new adjuster. A lot of times you're going to be working with IA firms that are going to treat you as a temporary employee. Okay? So when you first get started, it's really hard to be, they call it, we're all IAs in the eyes of the law, I guess, or in the eyes of the government. But some people consider IAs only those who worked strictly under a 1099 and not those who work under a W-2, okay? The thing is, most new adjusters are going to get a W-2 temporary employment type gig for the first year or two that they're deployable, okay? The reason being, that's just where all the action is, right? So, a lot of people say, hey, don't work with State Farm, don't work with Allstate. They worst people to work for. Well, that's because they're 1099. That individual who's saying don't work with State Farm or Allstate is a 1099 individual, and he's looking at what State Farm and Allstate do. It's like, man, that wouldn't work for me. Well, that's true. It wouldn't work for them. But as a new adjuster, it's one of the only things that do work for you, right? So you get your temporary employment number and you fall through that addict. As long as it wasn't true negligence, they can still come after you for true negligence. If the owner sues, it's going to be against the IA firm, not necessarily you, right? Because the IA firm is the one who has the insurance and the money, not necessarily you. Now, the IA firm can come after you if you're negligent, okay? Which means is if you didn't take reasonable measures to prevent any kind of damage, okay? So, as a new adjuster, if you get a W-2 temporary employee assignment, usually you get that for like Allstate or State Farm, almost always. What happens is you're kind of covered under the umbrella of the hiring firm because they're your employer, even though it's a temporary assignment. Now, temporary assignments, as soon as that assignment's done, guess what? You're a free agent. You can go out and do whatever you want to. But almost 9 out of 10 times, new adjusters are going to have to work under a W-2 temporary employee, not contract, but just a W-2. No sense in trying to confuse it there. But most new adjusters are going to be under a W-2 starting out. Then once you get your feet under you and you start working with some of these other firms that allow you to be 1099, you need to think about getting your LLC, because now you, in theory, are the IA firm. That's how they treat you, and you're not a temporary employee of an IA firm. I hope that makes sense for you. So, should you get an LLC? Eventually, yes. You don't want to be working as a temporary employee for your whole career. Although that is the easiest way to get employment starting out as a new adjuster, is under that temporary W-2. So, once you're ready to make that jump into a full-fledged independent adjuster, you need to have an LLC set up. Now, what about insurance? Okay, so we talked about LLCs, why it's important to have it. Insurance. What kind of insurance should you have? Again, as a W-2 temporary employee, most of that insurance is going to be taken care of by the IA firm you work for. But when you become your own independent and the IA firms start treating you the insurance carriers start treating you as your own individual IA firm, you got to have some insurance. The most common insurance people get is liability insurance and errors and omissions. I had that under my construction company when I had it set up, and that was running me about $2,000 a year. Now I was doing like roofs and stuff, so that makes it a little bit more expensive. I don't think it's that expensive if you're just doing it as a you're not dealing with full roof replacements and stuff like that. You're not doing the work. You're just more consulting. You're seeing error and omissions and some potential liability insurance just in case you do fall through an attic. But overall, you don't need a ton of insurance. I think it wouldn't surprise me if it comes out to like $150, maybe. Probably even less than that, but $150 a month or less than that. So anyways, If you have any questions, that's all I have for the LLC and insurance topic here. I hope that answers a lot of questions for you guys. A lot of you guys can start an LLC online real easy. You can do LegalZoom. You can go to somebody and have them set it up for you. If you're going to do a partnership with somebody, you can set up an LLC with both of you as co-owners for it. But I would only set that up when you're ready to make that jump as a 1099, and not if you're going to be a temporary employee. Just save that money, get the experience, and don't be negligent, and you'll be covered. That's pretty much what it comes down to. So anyways, if you have anything to add, feel free to comment below. If you have not liked and subscribed, please do that as well. I'm super excited that this deployment is about a little bit less than 2 weeks from being over. When I go back home, I'm going to be taking some time off, but we'll probably be shooting some videos on how to make money while not deployed, and excited to show you guys how to do some of that kind of stuff. Some of you guys that are just getting your license and been looking to get deployed for the first time and just wondering what you need to do for money, we're going to be talking about some stuff you can do for money to kind of help you keep paying the bills while you're waiting for that first deployment to come through. So any questions or comments, feel free to comment below. Appreciate you guys, and we'll talk to you later.